Good day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday, and we are now at the 10th of December 2019. We're at 5:07 p.m. Central Time, so you're watching the reopening of the stock market, what's going on in the metals a bit, foreign currency trade as it's moving out, and in the grain markets, we'll get to this in a minute. We had the USDA supply-demand report with the world supply as well. I saw the report for the soybeans and the corn is neutral. I saw the wheat report is looking a little friendly, as the cotton did. That was basically the highlights, and we won't get any more crop condition reports. They ended yesterday, so we're done with that. Now the question is how many acres, how many prevent planting acres. We're getting those numbers tonight too. And as they're coming in, we'll see how the market wants to support itself. But the bigger issue is what's going on with US-Chinese trade and with Canada, Mexico, and the U.S. in trade. Well, the positive is the U.S.-Canadian-Mexican deal, USMCA, was signed off by the representatives of all three countries. Today, Speaker of the House Pelosi came out and she said it's going to get fast-tracked right now in the House and they expect to pass it. Hold on. Senate Majority Leader McConnell says, not so fast. We have a limited amount of time left before we get to the Trump impeachment trial. I didn't mention that. House today says that's what they're going to do. They're going to vote to impeach the president, and they believe they have the votes to do it. So Mitch McConnell says today, okay, we're not going to vote on the USMCA right away. We got to do our spending bill and defense spending, discuss that between now and the holiday recess of December 20th. I don't know how that's going to play out with Republican voters. I think they want to get this USMCA deal done, but I certainly understand the negotiation and holding everybody's feet to what's going on. So you would think that would have been friendly, but the market is worried as to what goes on with passage of that in the Senate, which will eventually happen. And then it's probably very worried as to what happens with U.S.-Chinese trade, and the president's playing it so close to the vest. At first, we heard our Ag Secretary Perdue come out and he's saying, oh, he thinks that by December 15th, we will either extend or get to a phase one. And then Larry Kudlow, the economic advisor to the president, came out and said, those tariffs are still very much in play, and the president hasn't made a decision. I believe that the president hasn't made a decision. It wouldn't surprise me if he goes to the last minute. So you've got Sunday night to deal with. I welcome you to best because that's December 15th. When we look at a weekly area chart of closes, the close is up so far for the week 11 3/4, and it's certainly looking as though the break down to here, and let me just show you what that carried to. That was your break low close of 876 3/4. Well, it's starting to look as though because we're away from that 24 cents, maybe that was the break low for this round of this decline. I'm saying this round. I'm still worried as to what's going to happen on the weekly charts as we get towards the spring planting. And I know you think I'm crazy. I'm talking spring planting already. When we look at the daily bar chart in the March beans, you've got a pattern of lower highs and lower lows. After this vertical price move, even if you took out 917 3/4, my question is, you've moved so much. Do you want to be a buyer? Actually, that would throw the market into an uptrend, but I'm not saying you'd be a buyer or not. If you took that out, you'd end up temporarily with higher lows, higher highs, and they may even hold. I don't know. Resistance, I'm going to call it the 920 area, the 100-day average, support back at 907 3/4. When I look at the Bollinger Band, we pushed on this so far and so long that now this band is going to start falling at you fairly fast. So it's the combination of this band and the 100-day average that are potential resistance points with the support down there, and you are not overbought. You have momentum up, bias up, the swing line down, and if you take the swing line high out and turn the trend back up, you've got resistance 2 cents over it. In the meal market, the market is fighting a battle, and it's pretty clear at the 18-day average of closes, the red line. The pattern is one of lower highs, lower lows. The market, like the beans, fell down very hard, wiped out traders, and then from this 296 level, rallied all the way up to 306.70. It doesn't look like a lot, but it's about $1,000 on a futures contract. It's fallen back and still fighting at that 18-day average. Let's assume the market rallies from here. Okay, resistance 306.70. If the market continues its decline, are we talking that maybe it gets back to the lower Bollinger Band? I don't think that's as probable as getting up and fighting in that band, but doesn't mean I'm right. Sugar market, as I've said over and over, once this market cleared 13 cents, it did not look back. I'm sorry, this is soybean oil. We'll get to the sugar. I don't know why I saw sugar there. You're fighting at the upper Bollinger Band. What I don't like is when oil takes over leadership on the crush spread to get a bullish market in the soybean complex. It bothers me. Are we trending? No. You've got a lower low, higher high. In the corn market, you're drifting sideways. So the market's number one, lost a lot of the volatility it had. Number two, you're not getting follow through in either direction. You've got the swing line up in terms of higher lows and lower highs. And now the question is, can you clear and get over 278 3/4? If you do, that would turn the trend up. You'd have higher lows, higher highs, calling for resistance not too far away at 384. Clear that, 393 1/4 becomes the next resistance, the 100-day average. In the wheat market, need I tell you the battlegrounds, the 18-day average of closes? You peaked out up here, fell back to it. The trend is up today. Higher lows, higher highs, outside day up. The number is a chartist that I would not want to see taken out is today's low of 519 1/4, which is also a double bottom. 2 days ago you had that same low. If you can follow through in stages, I look for resistance potentially to the 541 zone. So we'll see if that offers anything to the market. In the sugar, and that's what I mistakenly said earlier, it wasn't on my mind, I read it wrong. Since the market has cleared that 13-cent area, this is what you call capturing the traders. Now, how many days in a row do we have over the Bollinger Band? Certainly today, day before, day before, day before, and right here, the market was not, or was it? 1306, it was, 5 days in a row. It's rare you get to a 6th day. So I am looking for whatever and however it happens for prices to try to get back under that Bollinger Band. However, that's not a sign of weakness. You've taken the slow stochastic study. Both numbers were over 80 today, both numbers over 80 yesterday, and both numbers over 80 the day before. Until this red line crosses back under 80 on a closing basis, I think this market now is screaming. It wants to be well supported. What surprised me is that this all happened from this sideways action instead of tighter Bollinger Bands. But let me come back to that. You have been over that 18-day average on a closing basis since back here. Literally, right through, actually it's back here, October. It's given you reasons as the bias is up to wonder about shorts. In the coffee market, if you had my morning subscriber video today, I was talking about this market. I said, I just don't see it ending yet. You've got the embedded reading. You're riding the Bollinger Band. You get over it. You pull back under it. I mean, it's just got traders caught. And, of course, you got weather markets in parts of the world where coffee is grown, and they're having serious issues. And I'm talking droughts, and the crop may not come out the way that people think. In the cocoa, battlegrounds, the 18-day average. The swing line has higher lows, higher highs, but the market is staying consistently right now under that 18-day average. When it closes back over it, I think the bulls have grabbed control of the market. Nobody's in control right now as I'm reading it. Bias down, swing line up, and momentum pretty much flat on the slow stochastic. In the cotton, I think the bulls today announced, I'm at the door, higher lows, higher highs. So that's the first time we've gotten a pattern. It's bothersome to me that you're at a 71 reading already because you're overbought. That does not mean you can't, if you catch the shorts right here, make a run for that upper Bollinger Band. I'd also look for support against the 65.31, the 18-day average, and I'd be very disappointed if the market, if I were bullish, gets back under 64.81. In the cattle market, the seasonals in this market often pick up at late December, so we're getting to that point. We're going to be at tomorrow, the 11th. Notice the battle. Notice the sideways action. The bears are in control right now. They lose control if the market takes out yesterday's high of 125.80. That puts into play the upper Bollinger Band at 126.50. Resistance is right here at 125.15. And support, if it does break down, is in the 123.80 area. In feeder cattle, you rallied right back to that line in the sand, this 18-day average, and you can see how it's been working in that market. But you've got a pattern of lower lows, lower highs. So that part of the market is still bearish. Bear is still held on. The close today, 141.65. I think they were sellers here at the 18-day average. I'm concerned because you're getting divergence with momentum turning up. In the hog market, yeah, we got a rally today finally, and disappointment because we haven't gotten anything done with the US-Chinese deal. By the way, I heard today that Tyson Foods is in their poultry division. They have already been approved by China as an exporter. They're putting the final papers together, and they're talking that they're going to start shipping poultry to China. So that's interesting because China lifted the ban on poultry exports from the U.S. to them. In any case, in this market, higher high, lower low, I see a battleground right here. Momentum is trying to flip the market to the upside. You can see how it's trying to push it. Now the key is for the market to do something with it. Hasn't done it. What you're going to see tomorrow is the Bollinger Band's going to fall fairly hard towards these numbers. If you see what I do, I can teach you to do the same thing. What I've done for my Cyber Week special is I am putting into the value of a one-year subscription to any of my research products, my charting course. It's $179.95 value. It is yours just for doing that. Now, you don't have to take the course right now. You can let us know when you want to start it. We'll do it. You can decide if you wanted to. Just let us know if you wanted to give it to somebody else as a gift. We'll be happy to work with you on different ways to do it. All you need to do is go to our website, our website under the word research. Look under that. Any of the one-year products will get you this. And if you want to learn about the course, just go on our website under the word education. It'll tell you all about that as well. And you're welcome to buy the course. I'd love you to do that. www.iraepstein.com. This sale ends Sunday. So I decided on a date late today. That's when it ends. Game over. I'm not going to be offering that again for a bit. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.